Nissan Joseph, CEO at Metro Brands, joins in to talk to us about how the quarter has been and, of course, what lies ahead for the rest of the financial year. Good morning, Mr. Joseph. Thank you very much for taking out the time to talk to us this early in the morning. Sorry, we've kept you waiting, but we had a commercial commitment to finish up with. But, Mr. Joseph, good quarter. Give us a sense of what like-to-like sales look like. And I refer to this because this is what your sales numbers are for the same number of stores in this quarter.
Right. So, well, good morning, and thank you for having me. We don't normally disclose like for like, but if you were to do the math and figure out that, we have about a 5% lift from new stores, 5 to 7% lift, and then that we were flat in revenue, you could probably work backwards to the like to like, But I think it's as in retail, you've got to look at the history of how that you come up with that like to like number. 2 years ago, we had a ridiculous 294% growth because we had just come out of the COVID quarter and, people were revenge shopping and all of those things. On that quarter last year, we still had a 12% growth. This is the quarter we're going against those big growth numbers for 2 Q1s consecutively. And we had some headwinds here because we had very few wedding dates in the season. We also had, an incredible amount of heat waves, and of course the elections, which is fantastic, also required our stores to be closed a day across the country in support of the election. So we had a couple of headwinds that got to us this quarter. But overall, though, I feel good about where the consumption is going. I feel good about the indicators we're seeing. And as the quarter has turned, we're starting to see business get more in line with how we would have predicted.
Joseph, it's good times for footwear brands, and we've seen a couple of the big brokerages as well, fairly constructive on the multi-brand offering of footwear companies. Give me a sense of what penetration is looking like pan-India. We'll talk about exports in a minute, and also locally, sports and athleisure. We talked last quarter, and we discussed this at length. How is penetration there? What are sales numbers looking like in the sports and athleisure vertical, largely because I believe a large part of the growth in the next few years could potentially come from this segment?
Yeah, so I think when you speak of our core brands of Metro, Mochi, and Walkway, I would say our penetration is minuscule, right? Metro has a little over 300 stores, and in a country as vibrant and big as India, 300 stores is nothing, right? And Mochi has 200 stores, and Walkway has 60 stores. So each of those banners independently, the penetration, I think, leaves a large white open space for us to continue expanding in. But to speak to your question about sports and athleisure, yes, we do see that business continuing to grow. Sports today, sports and athleisure is north of 15% of our business at Metro, Mochi, and Walkway. And as you know, we've also signed on Foot Locker and Fila. We think both of those will be able to capitalize on the growth that's coming on in sports and athleisure. Today, from a consumption standpoint, India consumes about 1.4 shoes per capita. As that grows, we also see most of that growth coming from the sports and athleisure segment. And also there's going to be a casualization of footwear, right? I think people are seeking comfort more and more. And the good news is Metro plays to that. And so will Fila and Foot Locker play to that as well.
Mr. Joseph, good morning. This is Tamanna here. Just wanted to talk to you a bit about what we've seen with margins this quarter. Flat, just a slight dip perhaps. Do you see margins in this range for the next quarter and the financial year? What is the kind of outlook going there?
Yeah. So Tamanna, that's an interesting way to put the question. They are flat, no doubt, but it's flat at 60%, right? So what I do want to point out that at 60% is industry-leading margins. So when you hit that top, we're comfortable staying in the 57 to 60% gross margin rate. And that's a range we will always be within. This quarter, with the end of season sale, that margin will dip down a little bit just as we liquidate products. The following quarter, it'll pick back up again. But overall, we've guided that our margins will be north of 57%. And our PAT would be in the 15 to 17% range. And I'm very pleased that despite a challenging quarter, that we've achieved both those numbers.
So you're seeing the same range for the rest of the year?
Correct. And that's something overall when you add up the 2 quarters, Q3 and Q4 coming up, right? So we're pretty confident that we'll be able to deliver those gross margins.
Okay. Just wanted to get a sense on your strategy in terms of e-commerce, because e-commerce is growing fast, 62% CAGR in 3 years, but you're also investing in more stores. Are you going to have those two run parallelly? This is, I mean, a big question globally as well in terms of whether shoe companies, focus on the e-commerce side or the store side. I'm wondering what your strategy and outlook is.
So, we see e-commerce as additive to our brick and mortar sales. And I know that sounds contrarian, but the reality is people start the journey digitally. If they can get to a store, they would love to have the store experience, the selection and the fit that comes when they go physically to a store. However, sometimes our customers are a little time starved or not able to get to stores, so they rely on the e-commerce vehicle, right? Overall, e-commerce is about 10% of our business. And when I look at it globally, Tamanna, I'm not seeing anywhere where e-commerce overtakes brick and mortar. In fact, we've seen a resurgence of brick and mortar post-COVID. E-commerce definitely is a very strong contender. Whatever happens, though, we've honestly continued to invest heavily into our digital space because we know that a lot of the customer journey is starting digitally. Now, whether they fulfill that online or whether they fulfill that with a visit to the store, a lot more of it's starting digitally. So one has to stay quite savvy. But on the flip side, I'm not keen on growing it at a faster than normal rate or a normal organic rate, simply because, as you know, the e-commerce space tends to be a little discount-led, and that's a game that Metro does not typically like to play in.
Mr. Joseph, good morning. Neeraj here. Just one question. You've had a very strong CAGR performance since the COVID lows, right? You kind of turned it around, done very well. This quarter, if I strip off the other income numbers as well, it was a flat quarter even with the other income. So is this a one-off in the quarter? Is your guidance for a particular number for FY25, FY26? And do you hope to be able to meet that after the Q1 performance?
Yeah, I think every retailer wished they had a great crystal ball ahead of them that they could predict everything. Neeraj.
But management's, leave out an exact prediction, but I'm sure you, by virtue of running the business this large, have a sense of what the growth could be.
Sure, I think over a period of time, and that's hence we talk CAGR, right? Instead of year on year or a specific window of time, we're very comfortable with the 12 to 15% CAGR growth, over a period of time. And if you go back to our pre-COVID numbers and you were to look at it, we're right within that range even after last quarter. So, that's a number we're comfortable with the growth. And I think that a large part of it has to do with the potential that exists in India.
Also, just very quickly, Mr. Joseph, before we have to let you go, your export business is looking good from what we understand. It's also better margin business. What is the sort of growth you're penciling in for your global markets and the margin outlook there? Any upside risk to those margins there?
I'm not sure where you're getting those numbers, but we have a zero export business. We are fully focused on India. And I often joke that I think we'll look at exporting or taking our concept abroad, right around 2050. But because there's so much opportunity in India, we want to stay focused. And I think that helps our business grow as we stay focused in what we want to do, but equally what we don't want to do.
Right. Well, good luck, Mr. Joseph. I hope for your sake and for Metro Brands that it becomes a global brand that you aspire to be, local with global roots or global with local roots, for all you know.
Thank you.
But good luck, and we'll see you soon.